Hey folks, Dan Frio here, the rate update. I'm posting this today because we have our next YouTube live. That is tomorrow, Saturday at 1:30 Central Standard Time. And we're going to go over loans that you might not know even exist. So I just did a recent video about it. So check it out. This is what we're going to talk about. So if it's something that you're interested in, please stay tuned tomorrow or log in tomorrow at 1:30 and ask as many questions as you want. That's what we're doing it for. So thanks a lot. Hey folks, Dan Frio here, the rate update. Today we're talking about non-QM loans. So what is a non-QM loan? You might hear this around town or on videos and so forth. So basically, let's look at this. There is conventional loans, there's government loans, and there's adjustables and jumbos and all that. And then there's what's called non-QM. So let me break it down. If you're looking for a conventional loan, we usually, and all investors or lenders use Fannie Mae and Freddie Mac for those. And then if you get an FHA loan, you might go to Ginnie Mae, and then you might have a jumbo. You might have something else. But what if you just have something that's a little bit outside the box? Okay. Well, because of the pandemic we experienced in the last 2 years, a lot of people found it hard to maintain a job with an actual paycheck weekly and so forth. So a lot of people have started their own businesses. And there's a lot of people that have rental properties that just had a difficult year or two, but now they're back. Okay, so that's what we're going to talk about right now. We're going to talk about those that basically are using or can qualify maybe with bank statements, or maybe with your 1099 income, or maybe just an asset depletion. Let's say, for example, and I've had clients call me in and they have $2 million in the bank, but they don't have a regular paycheck to qualify for a mortgage. So what do? Well, it's really hard to qualify for a loan, even if you got a couple $1 million in the bank, because when a lender's looking at your loan application, they want to say, on a monthly basis, what do you have coming in? And is that sufficient to pay your bills? So those are that and the investor piece of the equation is what we're going to talk about here. The other is debt service coverage ratio. So if you have a rental property that cash flows, well, you can get a loan, even though that might not show up on your tax returns, or maybe you didn't receive rent for 6 months because of forbearances and so forth. These are options that you guys have. So let's dig into the program to make it make sense to you guys. Okay, so first we're going to talk about the different programs that we have in regards to the bank statements. So let me zoom in a little bit on this. Okay, I know this is a little quirky, but look down here. Here's the information we can use or qualify you with. Maybe 1 year tax returns, possibly a 12-month bank statements. Maybe you have a 1099 only. W-2 only, asset qualifier. That's that asset qualifier that we were talking about. So that is one of the programs that we have to offer. So some of the basics of the guidelines is your debt ratio. You can go up to 50%. Reserves. What that means is how much money you'd have in the bank after maybe you did a purchase, or how much cash you have in the bank. You need to have 6 months reserves in many of these cases. It is available for your primary residency and your second home only, and you can get an interest-only payment. It is available. So that is basically our non-traditional borrower income qualifications. Okay, you can use those variations of income to qualify. Loans up to $4 million, 90% loan to value, and this FICO, basically your credit score starts at a 660. The next one is the Dscr program that we have. Now we have this program that qualifies off of 100% of Dscr. These are for investors. So let me explain what that is. So the debt service coverage ratio, which is right here, I apologize, this is all over the map, basically means as long as your rents, okay, as long as your rents equals to 100% equal to what your mortgage payment would be, you could be okay. Okay, but the other qualifications are you have to have the credit backing. We can only go a specific loan to value and so forth. So let's get back to that equation. So if you go with this program, the minimum FICO is a 680. Okay, remember, this is an investment loan, meaning you're a rental property, but you can go up to 85% if you're looking to buy the property. You can go to 75% if you're looking to cash out. Okay, again, it's 100% debt service coverage, meaning as long as the rents equal to or are greater than what the mortgage payment is, you can be okay. There is interest only available on that. You can close in an LLC, believe it or not. Foreclosures and bankruptcies. Foreclosures, you can't have any foreclosures within 36 months, and bankruptcies within 24 months. But look at the areas, look at the sections you can do or work in this program with. If you're a landlord, nonprofits, you can do fix and flips on this thing, affordable housing, rent stabilization, repositioning, strong sponsor. So there's all kind of backings of this, but what I want to make sure is, or what I'm trying to explain to everybody is, there are options out there for you. So these are just two options for people out there that had some tough times during the pandemic, or maybe you didn't have tough times. You just fit in one of these areas. So that's all we're going to go over with, because why? There's a lot of nuances to this. There's actually, believe it or not, we have multiple lenders doing this. So when you call us and we go through everything with you, what we're going to do is basically our first call is just going to be fact finding. We're going to find out, what do you got? What are we working with? And then rely on us. All those applications will come to me. I'll work with your mortgage advisor, finding the best program out there for you. When I mean by best, the lowest rate, the lowest cost, and what's putting you in the best position. Like, for example, we have a debt service coverage ratio program that is a no ratio, okay? But it comes with a higher rate and a little bit lower loan to value. So do you fit that? Is that the only program you fit into? Or can you fit into the 100% coverage ratio? If all of this is basically confusing to you, let me ask you this. All I need you to do is call us, 1-844-775-5626. And the best way to reach us, honestly, is just go to therateupdate.com. You're going to find yourself right here. Okay. The best thing I can ask you to do is right up here. This is where, call us at that number or book a meeting. Okay. I'd highly suggest in this scenario, you don't apply now because it's going to get really confusing, but either book a meeting or call us. And then what will happen is, when you call in, we're going to go through a fact-finding mission with you. So bear with us, because we want to find out exactly what you're looking to do and exactly what we're working with. And then give us about 24 hours to find that program and that package deal for you, and we'll get back with you. So that's it for today, guys. Thank you so much for watching. Please don't forget to give us a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. See you tomorrow morning. Take care. Bye-bye.